So I'm Mike McGlone. I'm with Bloomberg. I'm a strategist. My office is 5-minute walk that way. I live 9 miles that way, former New Yorker. And I, first of all, want to respect my audience. You're doers, I'm a sayer. I've learned how to make and lose a lot of money trading, most notably futures. And now I just give you an unbiased view I think markets are going. Now, Zach will follow me next. Zach's from Grayscale. Give you a more bullish view, a little more sell side maybe. I'm completely neutral, and as Stephen mentioned to me this morning, Mike, you're a notable bear in Bitcoin. I'm like, yeah, well, it's a bear market. So I'm just going to show you my key views on the market and why. And one key theme I want to start out with what I saw with an interview with Jim Grant this morning. Anybody know Jim Grant, Interest Rate Observer? Yeah, exactly. I started reading that maybe 4 decades ago when I was trading treasuries in New York. Used to have hair. This is stuff I do on the Bloomberg. But the key quote I liked, he did an interview with Jeremy Safran from Kitco. And his key quote was, bubbles always precede their use case. And before I dig in, I want to point out the most bullish thing in cryptos is the thing I pointed out in the same room like this in 2018 in Hong Kong. It was a big bear market in cryptos. The one bull market was the proliferation, accumulation of AUM and Tether. And that was $2 billion then. Now it's about almost $190 billion. So the number one bull market I see in cryptos is tokenization of dollars. And I fully expect, let's look at that trend. Back in 2018, Tether was down here as far as ranking among cryptos. Now it's number 3. I fully expect it to be 1. And one way to get that to flipping Ethereum is Ethereum to get to around 1,500, and flipping Bitcoin around 10,000 at current prices. So I want to start out with my first chart. I'm indiscriminate about markets. I've been at Bloomberg for 10 years, and I asked them to create 2 indices about 10 years ago because they're the best performing places I think needed indices. An all metals index and a cryptos index. So we ended up doing that with Galaxy, the Bloomberg Galaxy Crypto Index. The problem is I am pointing out the facts of poor performance. Higher volatility in cryptos, very poor performance. So I just take those indices, both of them, divide by the S&P 500 total return. And what you see in orange from 2018, the end of the year, yes, people can say I'm picking a point in time, but I'm going back almost 8 years on this. That's the performance of Bloomberg Galaxy Crypto Index versus the S&P 500 total return, despite the fact it trades at 4 times the volatility. Its performance, stuff I can't say on TV, absolutely sucks. Risk adjusted, highly correlated. Why would anybody want to allocate to this space until it finds a lower price cure? I'm not discriminating about it. Look at the metals index, same thing. Always been bullish in metals. In commodities, the main commodity you want to own, it's a physical, is something you can store in your hand. It's the metals, most notably precious metals. So tilting over, another problem I have with the index I asked the team to create, and they did with Galaxy, Bloomberg Galaxy Crypto Index, it's unchanged since around 2021. That's what you see in that orange line. It goes up with the stock market. And to give you an example of what it needs to go up, stock market has to go up. Most people get that. You saw it this morning. Someone saw that little issue with that potential U.S. warship being hit. But I overlay that with the S&P 500 divided by its 200-day moving average. It's the same chart. I call it the same chart syndrome. So to me, that's the theme I look in cryptos. We need to find a low price cure. We're not there. The whole crypto space, if you're long or bullish, you have to look over it, your value at risk model, and say, yeah, if the stock market's going up, maybe I'll do okay. Stock market drops 10%, you should expect to use the volatility weighted amount, which is 20 or 30%. Also, one thing I've always loved watching is Bitcoin divided by the S&P 500. Right after Trump got elected, it got way too high, around 40. It was not 40, but around 18, almost 20 S&P 500s per 1 Bitcoin. Now we're hovering around 10, 11. But the key theme is it peaked. The Bitcoin peaked with the S&P 500 during the biggest money pump in history, 2020-21. Makes sense. There's a couple books. One book is The Price of Time by Edward Chancellor. These kind of things are predicted. But since then, it's been a very poor performance. So what I overlay that is Bitcoin versus the S&P 500 is with the U.S. stock market divided by stock market cap to GDP. At 2.4 times, that's the highest on a year-end basis since 1928, when Herbert Hoover was elected. I did enjoy writing recently when Mr. Trump got elected. He has poor timing. He better keep that stock market up or the world's going to judge him. And now what's happening in Iran could be an indication of that. The key theme is, and money supply is booming, despite the fact Bitcoin's lagging. To me, that's just the bull market that's seen its glory days. We've got to find a low price cure. I've been calling for 10,000 for a while. We'll see if it gets back there. Still looking at that level as a particular indication. IBIT. The key theme I had when I was getting really bullish, I loved writing about cryptos when Trump 1 didn't get it and Biden didn't get it. I'm like, what are you not understanding about a space that's the base layer's a dollar? The most significant area is accumulation of stable coins. I love to call them crypto dollars, and they're invested in US treasuries. And once they figured it out, I figured it'd put in a peak. Now, Trump did that. I caught it a Faustian bargain. It helped him get elected. But once we got ETFs launched, trade's over. Best back test in history, goes mainstream. What's the issue of a good back test? Once it hits the mainstream, trade's over. So that's why I point out the number one ETF is basically flat versus the S&P 500 versus SPY. Trades at 4 times the volatility. Why would anybody in their right mind allocate to an asset that's twice the volatility, poor performance, and highly correlated? Sorry, I was an ex-money manager. We'd look at that and I'd say, no, thank you. Give me a good use case or a better level. Also, volatilities and the correlation is very high. It's the key theme I'm just pointing out. Something might have to change, but until it does, this is an uninvestable space unless maybe we get lucky. And I've never been one to suggest we should get lucky in any investment. So this is a level I put out a little while ago. Can Bitcoin stay above 75,000? I started out the year that my key theme for this year is stock market volatility should go up. It hasn't yet. It's kind of just hovering, 180-day volatility. So I've been wrong, but recommended selling Bitcoin near the start of the year. Now got back down to 60, good support. My next level was around 75. Right now, this morning, got to 80. But what's the only thing, if you're holding Bitcoin, that you need for it to go higher right now? Stock market has to go up, and it's a poor performer. So I just overlay this is, okay, we're above it now, but if you're long it, I look at it as a bit of a prudent short. Because if stock market drops 10%, Bitcoin's going to drop 20 or 30. Maybe I'll be wrong, and maybe we'll show divergent strength. That would be awesome. Don't see any signs of it yet. But the key thing was I point out this. You overlay with S&P 500, it's disengaged. And the key theme is when people tell me, oh, all these other big cryptos are not correlated, in the magenta line, I show you the market vectors, small cap 100 crypto index. Performance absolutely sucks. Why? There's an unlimited supply of cryptos. There's one in 2009, and now there's millions. And to me, that's a key thing I want to point out. The correlation between Bitcoin and all the other cryptos is the highest almost ever. Now, I think I'm using 24 months on that. Also, I want to point out as a leading indicator. This is another leading indicator that hasn't worked yet. In green, you see the S&P 500 total return. It's a wonderful thing. Big green candle. It was nice little red a little while ago. But you take the S&P Bitcoin divided by gold, one of my favorite indicators, it's showing you we got a problem this year. But the number one theme this year, something that's never happened in markets, maybe in short periods of time, is this is a measure of 180-day volatility in S&P 500. It's around 13%, historically very low. Average is around 19, 20. And 180-day volatility on gold. It's 2.3 times. The last time that the spirit happened was 2006. It's a great time to look to sell markets. But that's a key theme, is my point is that's why I still think you have to expect stock market volatility to go up this year, just to go up and catch up to what it always has versus gold and crude oil. But that hasn't happened yet. It's wonderful. We haven't got there. That's part of the reason I can't be bullish. Highly volatile risk assets like cryptos, most notably Bitcoin. Similar thing, we have a simple red candle in Bitcoin this year. It's down 9%. S&P 500's up 6%. It's poor performance. It was down last year. Bloomberg Galaxy Crypto Index was down 20% last year, another 20% this year. What stops it? S&P 500 has to go higher. It's still kind of stock market cap to GDP at all-time highs. Do you want to allocate the risk assets at that level? Maybe we'll get lucky. Maybe Trump will get lucky. But I look at the key risk is Bitcoin can just mean revert. Normal reversion is towards $10,000. 50,000 is first good support. We'll see what happens. Now, here's another chart I like to use, Bitcoin to gold ratio in the magenta. It led everything up. It led the stock market. It should have. Some of us are really bullish. Some of us got off the horse too early. But now it's broken down. If we just get a normal reversion in the S&P 500 towards its, I'm just using 36-month moving average, it's going to happen. The question's when, from where, how, what's the trigger? Bitcoin to gold's already telling us it's a problem. Or you can say buy Bitcoin versus gold. I'd say, well, good luck. Again, another key theme is that green candle. That's the S&P 500 total return. Now, a few months ago, it was red. It's got to stay green. to be long cryptos. All of them, maybe not stable coins, but certainly number one, Bitcoin. And that's a key theme again also, is what matters when stocks drop. It didn't say if, it's just going to be a when. So we all know we have to allocate accordingly. But the key thing is this green candle, according to volatility, will end up red on the year. And the later in the year it happens, the worse it's going to be. Maybe Mr. Trump will get lucky and find some kind of way to get out of this. Here's the key thing also. This is, in the magenta, I show you stock market volatility. This is, again, the annual chart. See how flat it is? I just fully expect it to go up this year. Very simple analysis. So Bitcoin breaking down, S&P 500 too expensive. It's wonderful. It's great we can get there. But the key level back here, I got lucky enough when Michael Saylor jumped on board to say when it was at 10,000, it would just add a zero. That was 2020. But then he doubled down when he got a 10x. We all know the lessons of tempting the market gods. He did. So far, the stock's, I think it dropped about 80%, so it's come back a little bit. But I want to end with my final chart, the key theme, that's the macro. First of all, gold versus treasuries. What's the main competition for gold in treasuries? That's what I show you in that orange line. You take a total return of the of total treasuries, even just a long bond, divide by the price of gold. Now that's the price. Gold right now is the most expensive versus U.S. Treasury since 1982. Yes, my data only goes back to 1973 on that. That's a pretty long time. You need a good reason to be buying gold and selling treasuries at this level. And of course, that long bond reached 5%. Yes, there's always good reasons. I get it. But then markets get to this level, what's the allocated, the rational thing to do? And then I look at the stock market cap to GDP. Now here it shows 2.3 because I have to use defensible data. So I just take the S&P 500. I can go back 100 years on the Bloomberg terminal, divide by GDP, add 2 zeros. It's almost the same thing. The actual stock market capitalization data going back 100 years is more dicey. That's relevant data. And that's part of the reason I'm still bearish Bitcoin. But the key theme is it was launched in 2009 and there was one. And now there's millions, not Bitcoins obviously, but cryptocurrencies. As a commodity guy, I see unlimited supply, and this is why I show Bitcoin led the way, and I think just a normal reversion towards 10,000 with just a little backup in stock market GDP, a little recovery in U.S. volatility from the lowest levels in almost 8 years, and that to me is the theme of what's going to happen. We're overdue for just a normal reversion. Crypto's leading the way, and maybe we'll get lucky this time. So that's the bearish case, and that's what I've been publishing on for about a year now. So thank you very much. I think we're no time for questions, I guess, or on to the next.